So Palantir just blasted through earnings. We've seen the numbers. Everybody's shocked. They left pretty much everybody speechless. Just to kind of recap, if you've missed the highlights, sales are 827 million, which is a lot higher than the estimated 780. The earnings per share were 14 cents, which was a huge bit, with 11 cents as the estimated number. Customer count grew by 43%. Rule of 40 went up to 81. Q1 outlook sales of 860 million compared to estimated 799. And for the whole 2025 year, the outlook is $3.75 billion versus estimates of 3.5, which is a huge beat. So everywhere across the board, they've beat earnings, they've beat sales, earnings per share. The guidance is great. And they just had a phenomenal earnings call with Sham Sankar, with the team, and obviously Alex Karp bringing down the hammer, saying things that are literally unthinkable for any other CEO, talking about how they may have to change the rules because of how good Palantir has become. And at this point, it's essentially unfair to other companies of how good Palantir is. Talking about how the lean sales force still drives this business because of how easy it is to sell it, about how the company still did what it did morally without basically kissing ass to China, basically allowing us to slowly realize that Alex Karp was not wrong in saying that we have adversaries in China. They're not our friends. There's going to be an arms race in AI. Now everybody understands this with DeepSeek, but he was telling you that 15 years ago, 10 years ago, 5 years ago. People finally understand it's not just about the revenues. It's not just about the money. He was right about China, right? And the thing is,
All right. So changing the rules. I hadn't heard that before in a earnings call, but then again, I don't listen to many earnings calls. I don't really see the need to. I just focus on price. I mean, if the price is moving, that's what I'm looking for, right? So if we look at the price of Palantir this morning, it's going to explode higher. Currently pre-market, it shows it's going to be up 23%. So way up here, right? Now, we had been following Palantir for a while. Like, people got really excited on Palantir, and we covered many different videos on it. But the other day, we covered one about the expected move of how to calculate the expected move of a stock at earnings. And with Palantir, it's expected to move roughly $10 up or down. And it looks like it went up like basically $20, right? $20, which I have lost so much money trading earnings because of moves like this, right? Let's say that you bought puts. Let's say that you were like the guy who's like, you know what, Palantir's just had enough. It has to go down, right? Let's go look at a couple of these analyst ratings, right? Let's say you're the analyst who call for the $60 price target, and you're like, well, daggum, I'm buying all the puts I can. Or the analyst with the $28 price target, right? I'm going to buy all the puts I can. You just got ruined, right? Or even worse, which is what I was doing. Even worse is selling options, right? So there are people on the internet who would tell you to, when earnings come, right, what they tell you to do is go sell an option above the expected move and below the expected move to collect all that juicy premium, as they would say. And if you know, you know. They'd say, go collect all that juicy premium. And then after earnings, because it never reaches the expected move up or down, the volatility collapses, all that juicy premium comes out, and then you get to keep all that premium that you sold, right? I'm here to tell you right now, that is a horrible, horrible, horrible way to trade. One of my worst absolute trades, I remember it being in Akamai, and it was an earnings play exactly like this, right? Where I would sell an option above, I'd sell an option below. And while I did get the move within that window, right? Imagine the move being within this range right here. The volatility had collapsed, but I hadn't taken into account liquidity. And so when I went to exit the trade, it should have been an easy winner. And let's just use round numbers here. It should have been an easy $2 winner, okay? But because I hadn't taken into account liquidity, the volatility got crushed. The stock price didn't move all that much. My options were going to be fantastic, but I'm trying to exit the trade. I'm trying, and I'm pushing my price down over and over and over. So instead of 250, I'm at 220. I'm at $2. I'm at $1.80. I'm at $1.70. Whatever the case is. I remember getting out of the trade, because when you do that, when you sell these options, you want to get out as fast as you can, take that IV crush, that implied volatility crush, as fast as you can, and then get out of the way. So if the stock does move, that you're not losing more money, right? and I ended up with a losing trade. Everything was set up correctly, but I couldn't get out of the trade for a profit because of liquidity, right? And that super sucked. Okay. So when I talk about trading earnings, I have a couple key rules that I look at. But one is I love to trade up into earnings. A run up into earnings is a fantastic, almost easy trade to make. And if you had been a Palantir shareholder, you would have thought that as well, right? And we talked about the other day, rather than buying something on the way down, right, when it's down to 76 or 73-ish dollars, right, when it had peaked at 84 and it had been coming down to 73, eventually hitting the low at 64 and then coming back up. If you wanted to buy it at 73, just wait until the moving averages cross back, right? Your 10, 20, 50 outlier trend template showing the 10 over the 20, price over the 50, which happened right here. You could have got it for the exact same price while price was moving up, and you would have saved time, right? You would have had more profits more faster. You would have had a lot less mental stress. And you don't know if on its way down, it's going to stop, right? It happened to have stopped right here, but it absolutely could have kept going. Okay. It absolutely could have kept going. And then if you had bought it on this side of that, boom, rocket ship higher. Okay. So rather than trying to buy the dip, why don't you wait until the dip stops, turns around, shows you where it's going, and then watch it rocket ship, right? And there was a few days ago where I called this trade almost. Let me see if I can find the post real quick. 2 seconds here. I said that this is one of my all-time favorite bullish moves, is what was happening in Palantir. Literally 3 days ago. Palantir is extremely bullish to me leading into earnings. This is one of my favorite ways to trade. Buy the rumor on the build up to earnings, but be careful if you're holding into earnings. Even a great earnings can lead to a disaster in the stock price. See SoFi, right? And so I totally love to trade these runs up into earnings, but I don't like to trade into earnings because I have been burned so many times. I do want to show my rules as far as earnings real quick. So is the trade already profitable, right? Am I in the trade and am I already making money? First question. If yes, does the expected move break the trend line? Now, I showed in a previous video how to calculate the expected move here. And for me, it would have broken the trend line that I was following. So I would have gotten out. And of course, I would have missed out on this big old move right here, right? But that's my style of trading. Okay. I know I would have missed out. I know you're probably in the comments right now, smashing those keys as hard as you can. You're such an idiot. How could you have gotten out? Right? You would have missed out on this biggest move of all time. You stupid guy, right? You need to like find a different hat to wear every time. You're probably bald. This could be under there. Yeah, right. I know you trolls out there. Point is, that's not how I trade, and that's okay, right? But if you're a Palantir shareholder, you're probably waking up pretty darn happy this morning. But I will want to, I do want to give a little bit of perspective, right? IBM is what you want to see happen. This big gap and go. So there's a potential of either one of these two happening. A big gap and go where it gaps up and it's going to continue to go higher, right? That's what you want to see. But the other could happen where it's called a gap and crap, basically, where it gaps up and then it comes right back down. Okay. SoFi, I did want to show real quick because a lot of people were so stoked on SoFi. I mean, a whole YouTube channel is devoted to this, right? The deal with SoFi into earnings was that they had great earnings, but they were right at this order block right here. And I've been telling people, watch out for this order block. In fact, I'll show you where I said it. I'll show you exactly where I said it. Hold tight. Where's it at? Right here. SoFi now is a double order block, a brutal move down today. Last week, I told everyone who would listen to watch out for that area. Do you see why now? And then here, will SoFi push through this order block and blast higher after earnings? No, that's not what happened. We got absolutely wrecked on SoFi if you were trading it. So if you are a Palantir shareholder, congratulations this morning, but be wary of the gap and crap, right? If it takes, give it 3 candles to find out if it's going to gap and go or gap and crap. If it does gap and crap, I would say take your profits while you can, right? Because it could absolutely round trip right back to here. We've seen that before. So let's do this. Let me introduce myself. I'm just a random guy on the internet, right? But my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now, let's get back to today's video. And of course, see how we rank this out of 10 and subscribe if you haven't done so already.
You also have to listen to a guy like Shyam Sankar and says, look, the current solutions we have, things that used to take 5 days now take 3 minutes. Imagine how much money this is worth for companies, for customers, for partners. Currently, the share is at $102, $103, up 22, 23%. It is absolutely insane. People are celebrating. A lot of dividend investors are not having a good day. A lot of value investors are not having a good day. Completely understandable. But I'm here to let you know, number one, I'm going to put out a whole deep dive on these earnings. I'm going to go through every single number with a fine comb, and I'm going to give you every single data analysis breakdown. I'm going to post a 45.
Now, this move, the catalyst for the move was the earnings, but this move was already in check, right? This bullish move, you got the 10, 20, 50 all across north, no order blocks in the way. As I mentioned earlier, that's one of my favorite things to do is trade up into earnings like this. And when there's clear skies, that's a very bullish sign, right? When you're hitting new all-time highs, new 52-week highs, that is incredibly bullish. Because think about it logically, right? Anybody who owns Palantir at any price is making money today, right? Anybody who's ever owned Palantir, any price, is making money today. So therefore, buying begets buying, selling begets selling, right? That's how trends work. In fact, let me show you what I mean by that's how trends work. So this is a great Wall Street cartoon, right? Where it's like when someone says, hey, it's a good buy, right? Goodbye, right? This huge trend develops. This is human psychology at play right there. And in fact, let's do this. I want to look at so inside of Outlier, we did get a buy signal on this on December 24th. Clearly, that's been a great buy signal panning out through here. And historically speaking, Outlier's signals have generated a 638% return on Palantir, knowing when to get in and out. So pretty outstanding right there. We did have some fear come into the market for Palantir around January 15th. Came out, got a little bit greedy. It didn't get all that greedy, but I bet you today the greed really pops up like this, right? I bet it really pops up like this. And then the tech sector has gotten more and more greedy as well. So certainly a very bullish setup here for Palantir.
Minute video early tomorrow morning with all the analysis, all the basically the numbers, everything from the earnings call, everything from across the board. You're going to have a massive 45-minute video tomorrow morning with everything that happened. I'm here today for one thing. A lot of people may feel like, number one, they've missed the Palantir boat, or that they've arrived, or they're euphoric, or it's time to celebrate. We're here. No, we have not arrived, and you have not missed the boat if you haven't yet invested in Palantir. There's nothing to get overexcited about. There's no reason for euphoria. Nothing has changed. The company fundamentally is as good a company as it was a few days ago. The only difference,
I would say, that I would not be buying it after a 20% up move. I want to see some consolidation, some pullback, some less risky points, right? I don't want to be buying something that's, how far away is that going to be from the 10 moving average? 20% away from a moving average that I would follow. I want it to be a lot closer.
says that now Wall Street understands the things that we've been saying for the past year, and they're adjusting their prices accordingly. So you're going to see a lot of euphoria, a lot of FOMO, a lot of people jumping on the bandwagon of Palantir, but you have to relax. You have to come down. There's no reason to FOMO. The stock is not going to go to 500.
Listen, this is investor psychology at work. This is exactly investor psychology, what he's describing right here.
In 3 months, you'll have plenty of time to invest in Palantir through dollar cost averaging, slowly buying at every single price point. As it comes up, as it comes down, the market is still going to do some wacky stuff for the next few years. We'll have plenty of opportunity, because even at $1 trillion market cap, Palantir, in my opinion, is still a low ball at that number. So there's plenty of time. Do it slow. It's a marathon, dollar cost average, and basically do it in a way that doesn't require you to time the market and gamble and do all that stuff. So let go of the, oh, I missed it. Let go of the, I got to get it now. And just focus on slow, emotionless, logical dollar cost average. I've been saying this for a while now. I've been saying this for a while, telling you, hey, this is the way. For the past 2 years, 104 weeks and 1,300% in profits, I've told you the same thing. And now you're seeing I was right. I'm not a time traveler. I'm just a money guy and understand how to get wealthy, generationally wealthy. It's just, I'm going to teach you a system that it's going to take some time. It's going to be slow, but it's going to happen. Everybody wants to, get rich quick. Nobody's willing to get rich slow. This is generational wealth. It has to happen slow in due time.
Well, just want to point out, right? Only price pays. Only price pays. And yeah, it has been trending higher for a long time. A long, long, long time. Right. So keep in mind, you don't have to hold it when the 10, 20, 50 outlier trend template is moving down. But when the 10, 20, 50 is moving up, dude, that's what you want to see. That's what you want to see right there. Right. What he's describing is being in that upward trend. Right. When the trend doesn't work out, that's okay. Take a dollar loss here or there. But when the trend is moving higher, that's what you want to see. And it can ride that trend for a long, long, long time for a lot of dollars. Okay. So, yeah, having that outlier trend template makes it a lot simpler to know when the trend is moving your direction, which is exactly investor psychology that you want to see. And you want those people at your back rather than trying to go against any trend like this, because you're going to get run over, right? The market can stay irrational much longer than you can stay solvent. So the trend is your friend until it bends. And of course, only price pays. So let's rank this video here. Out of 10, where would you rank it? Let me know in the chat where you would rank it. I'm going to rank it as 6. And reason why is he's not going to get worse from that for me, because this is not one of those pumper videos, which I've seen a lot of that are like awful. Oh my gosh. Where it's like, please buy this stock that's going to zero. I have so many shares in it. I need it to go back up. No, it's not one of those. But he's not going to get a 8, 9, 10 out of me, because I mean, it's just a voiceover video. I think we could have had a little bit more quality there. Plus, Tom Nash actually watches our channel. So, hey, Tom, what's up, dude? So either way, let me know in the chat what you would have ranked it. And of course, tell me what you're trading. Don't forget that only price pays. And come back tomorrow. We'll help you save time, make money, and start winning with less risk together as a team. YouTube is going to pop up winning with less risk together as a team. YouTube is going to pop up a couple recommended videos. I recommend that you watch one of those, and we'll talk soon.